This is Bloomer Quint. We are in conversation with the Chief Financial Officer of JK Paper, Mr. V Kumaraswamy, who will take us through the quarter gone by as well as what we can expect in the upcoming financial year. Mr. Kumaraswamy, thanks for taking the time out. Let's just start by assessing how business has panned out for you in this particular quarter in terms of revenues and growth, and what is your assessment?
Yeah, thanks for inviting me, and it's nice to join you. The quarter has gone good, and the year has ended at good results with about 13% increase in the top line. That's the gross sales line, and we managed to increase our EBITDA by around 45%, PBT by around 81% at 678 crores, and PAT at around 437 crores vis-a-vis 260 crores in the previous year, for a jump of around 68%. So the board has declared 35% dividend for the year. The company has deleveraged itself during the year. It got a rating upgrade both for its short term and for long term. We are now A1 plus stable, and A1 plus for short term, and A plus for long term. So this has also resulted in some kind of interest rate cuts. The markets are good, but some kind of tepid price increase only in the coated and packaging board segment, and uncoated paper is holding and doing good. And the volume growths are there for the year-on-year basis, about 5 to 6%, and in the value-added packaging board segment, there is a good growth in double digits. That's about 11-12%. So going is good. Price situation is good. We got a good realization of almost about 11% or something or year on year. Cost optimization and the efficiencies of technologies are kicking in. So it's good.
All right, sir. Let's talk about inputs then. What are you making of lumber prices as things stand? And also, what is the pricing environment when you're witnessing when it comes to the paper industry?
See, the raw material prices have been softening, not so much as on account of paying lesser prices to the farmers, but we have continuously decrease the distance to procurement of these raw materials. Example of about 5-6 years back, we used to get our raw materials from 600-700 kilometers for our Surat unit in Songad. Today, everything is procured within a distance of around 150 kilometers. Likewise, from 700-800 kilometers, it has come down to about 250-300 kilometers for our Orissa unit. So this has considerably optimized our procurement costs of raw materials. Plus, our own clones, which has been propagated, is giving much better yield to the farmers. So his yield per hectare or acre has gone up significantly in the last about 3-4 years. That's why many of the farmers are switching in the nearby areas to our crops. So if the trend continues, I think we should be able to maintain this kind of raw material prices. And as far as the output prices are concerned, the cut size copier market is got some minimum price at which it can be imported. So that covers nearly about 50% of our output sales. Packaging board, of course, there is some amount of overhang of supplies, although the growth is good and it will be taking care of much of this overhang. Coated paper, India imports nearly 50% of its requirement, perhaps even more, and the prices are more or less dictated by import parity prices there.
All right, so fair enough. If you could also tell us a little more about capacities and utilization, the way things stand, and if there is any capital expenditure that is being planned at this point in time.
Yeah. So we managed to get some profit uptick even from our capacity utilization. Our capacity utilization was 108%, and we are doing much more debottlenecking and exercises through minor capital expenditure. Last year itself, we spent about 94 crores and increased our capacity utilization by 3%. A similar kind of thing is possible by process optimization, better product mixes, and better speeds at which you can run the machine, and better deckel weights and various other things. Again, a similar kind of thing is what we will do this year. Meanwhile, we have also announced, as you know, the expansion in our packaging board segment to increase our capacities by 1.7 lakh tons in the interim, or on phase 1, and phase 2 it will be almost up to 2 lakh tons. This will be accompanied by the fully integrated pulp mill, about 150 to 160,000 tons, which will feed the entire chemical pulp required for this operation. And for that will be approximately at a cost of around 1900 crores, for which the efforts are on, and we have also recently concluded the public hearing for environmental clearance. So hopefully we will accelerate our steps to completion. Takes approximately 22 to 24 months from now on to finish the project. So we'll get some good uptick from there in terms of volumes. And as you know, we also took over Sirpur under IBC in the month of August last year. That will add about 136,000 tons to our capacity in the writing and printing segment. There we have invested about 371 crores to take over the unit by a mix of instruments of equity, preference, and cash payments to the bankers. We also have to spend another about 400 to 425 crores for modernizing, upgrading the mills. So that effort is in full swing, and I think beginning this month we'll start the commercial production in stages. We have retained only 4 machines out of the 8, although we hope to increase the production by around 40% from 96 to almost 136. And hopefully by September, October we should be having the full capacity for use there. So these are the Capex plans and
Okay, so then final question then. If you take all these factors into consideration, what is the outlook for the upcoming financial year in terms of revenues as well as margins?
Well, we don't put out any specific numbers, but the revenues should grow at least the kind of numbers that we have seen in the last year. And we will continue to play on cost optimization of processes. We have also engaged with a couple of consultants to look at the process optimization, operational excellence, and we are also implementing our new SAP, which is building on the business process reengineering exercises. And the market will continue at least for the near term the way it has been in the last about 2 or 3 quarters. Let's see how we go from here.
Okay, all right, Mr. Kumaraswamy, we leave it at that. Thank you so much for joining us and taking the time out and speak to us on Bloomberg Quit. Wish you the best for the future.